Welcome back, savvy investors. Today, we're diving into the realm of wealth creation with our countdown of the top 10 assets that can make you rich. From classic investments like real estate and stocks to emerging trends like cryptocurrency and intellectual property, we're uncovering the key avenues to financial prosperity. Whether you're a seasoned pro or just starting on your wealth-building journey, this video is a must-watch. Don't forget to subscribe for more insightful content on mastering the art of investment. Number 10. Business ownership. Owning the business can yield significant wealth through profit generation, equity appreciation, and asset accumulation. Successful businesses often generate passive income and offer opportunities for expansion and scalability. Moreover, owning a business provides control over strategic decisions and the potential for substantial returns on investment. However, it also involves risks, such as market volatility, competition, and operational challenges that require careful management and strategic planning for long-term success. Number 9. Collectibles. Collectibles encompass a vast array of items such as rare coins, stamps, vintage toys, and memorabilia. Their allure lies in scarcity, historical significance, or cultural relevance, often appreciated over time. Passionate collectors avidly seek out these items, driving prices upward in niche markets. Investing in collectibles requires expertise and diligence to navigate fluctuations in demand and authenticity concerns. Number 8. Commodities. Commodities are raw materials or primary agricultural products that can be bought and sold. These include items like oil, gold, wheat, and natural gas. Investing in commodities can provide diversification benefits to a portfolio because they often have a low correlation with stocks and bonds. Additionally, commodity prices can be influenced by factors such as geopolitical events, weather conditions, and supply and demand dynamics, making them attractive for investors seeking alternative assets. Number 7. Intellectual property. Intellectual property, IP, refers to creations of the mind, such as inventions, literary and artistic works, designs, symbols, and names used in commerce. It can be immensely valuable, as it grants exclusive rights to creators or owners, allowing them to monetize their creations through licensing, royalties, or outright sales. Examples include patents, trademarks, copyrights, and trade secrets, all of which can yield substantial financial returns when managed effectively. Number 6. Artwork. Investing in artwork involves purchasing pieces of art with the expectation that their value will appreciate over time. This can include paintings, sculptures, and other forms of artistic expression. Art can serve as both a store of value and a potentially lucrative investment, particularly if you select pieces from renowned artists or emerging talents whose work is gaining recognition in the art market. Number 5. Gold. Gold is a precious metal often sought after as a hedge against inflation and economic uncertainty. Its enduring value has made it a popular asset for investors looking to diversify their portfolios. Gold can be purchased in various forms, such as bars, coins, or exchange-traded funds, ETFs. Its scarcity and historical significance contribute to its allure as a long-term store of wealth. Number 4. Cryptocurrency. Cryptocurrency refers to digital or virtual currencies that use cryptography for security and operate independently of central banks. Examples include Bitcoin, Ethereum, and Litecoin. Investors are drawn to cryptocurrencies for their potential high returns, but they also come with high volatility and regulatory uncertainties. The decentralized nature of cryptocurrencies allows for peer-to-peer transactions without the need for intermediaries like banks, making them a unique asset class in the financial world. Number 3. Bonds. Bonds are debt securities issued by governments or corporations to raise capital. When you purchase a bond, you are essentially lending money to the issuer for a predetermined period. In return, the issuer promises to repay the principal amount along with periodic interest payments. Bonds are often considered less risky than stocks and can provide a steady stream of income through interest payments. Number 2. Stocks. Stocks represent ownership in a company. When you buy stocks, you're buying a share of that company's profits and assets. Stock prices fluctuate based on company performance, market conditions, and investor sentiment. Investing in stocks can potentially yield high returns over time, but it also carries risks due to market volatility. Diversifying across different industries and conducting thorough research can help mitigate these risks while aiming for long-term growth. Number 1. Real estate. Real estate investment involves purchasing, owning, managing, renting, or selling properties for profit. It includes residential, commercial, and industrial properties. Investors can generate income through rental payments, appreciation in property value, or by developing properties. Real estate offers the potential for long-term wealth accumulation, hedging against inflation, and tax benefits. However, it requires careful research, management, and market understanding to yield profitable returns. Unlock exclusive content and updates by subscribing to our channel.